Hi everyone, today is Saturday, the 26th of February, 2011. Let's take a look at these markets. The S&P 500 for the week obviously lost some ground here, but very nice recovery. And if you take a look at where it bounced from, really, it was this longer-term trend line since the lows that we saw back in August of 2010. So you can see we've got a couple perfect hits upon that level. There was also a trend line that kind of looks like this, and if you take a look at that trend line, just representing the essence of this most recent leg higher, you can take a look down at this 65-minute time frame or so, and here's what that trend line would look like, kind of hitting perfectly on that. And we could go to where that rally began, and you can see that we pulled back a little bit more than a third of that. That is, we retraced a little bit more than 38 points to 2% of it. But longer term, the uptrend is intact. Now, it's possible that maybe we get a lower high, and from there, this market falls apart. Or it's possible that we could get a little bit more kind of choppy action like we did last time. We tested near that 50-day moving average, and a time correction wouldn't be a bad thing. If we take a look at the 30-minute time frame, you can see that we got right to that declining 5-day moving average today. So that means that for Monday, that really you've got to kind of look at this market and say, what is it going to do in here? The last day and a half, the market got pretty extended, and now that when I go back and look at the calls I bought here and sold here, that's trading. The time machine wasn't showing me that at the time. But anyways, these markets, are showing some good volatility. And what I would like to see is maybe a pullback down even towards 131 and a half. That kind of gets people nervous. And we create a more solid higher low. And then we can kind of work on that 5-day moving average and head above it. But you got to be impressed with the bounce that this market experienced. It didn't take long, and we did get a 50% retracement of what had been the weakness, that developed from Friday's highs to Thursday midday low. So 50% of that level, we're at the declining 5-day moving average, and it says, one day we've got huge positive or negative breadth. The next day it's just the opposite, 5-to-1 advancers to decliners on Friday. This market, we'll be looking at longs and shorts in here, but with still a general overall bias to the upside. The Nasdaq 100, for its part, excuse me, if we back up this longer term on the daily time frame, you can see the 50-day moving average was tested, and you look at what's the essence of trend. Does it make sense to draw a trend line that looks like this? No, because that's completely broken, and we don't want to make stuff up. But what's represented the trend in here? You could say, was it that? Well, that got broken, but this bigger one right here, I think, is what represents that essence of trend, and it's near the 5-day moving average. Now, obviously, next week, if we break the lows for this week, then we're really going to want to start to become very defensive and start looking for, or having our eyes open for more short opportunities that the market, if the market can show us some good ones. Another interesting trend line here on the Nasdaq was this recent move. Here we could see from the lows just at the end of last year, we take that move, and you can see we came in and retraced almost exactly 2/3 of that movement and found trend line support as well. So these are not the types of markets that indicate that they are topping out. It could down the road indicate that, but we've got bigger levels of support still, and this was a well-deserved breather for the market. So this week's lows are going to be important, and below that, the bigger level for the Nasdaq, probably down between 55.10 and 55 and a half. Really, that's the bigger level that we need to be concerned about. Just out of curiosity, let's see where the volume weighted average price is for the Nasdaq year to date, and we had been briefly below that. Let's take a look at that for the SPY as well. The Nasdaq, the SPY volume weighted average price, we had found support right on there, and that's kind of interesting. That perhaps that's where the programs were turned on. Hey, as long as we're above the average price year to date, go in and buy these pullbacks. Now, you don't want to read too much into it. It's an interesting tidbit of information, I guess, but it's not what's going to pay the bills. The financials came down to their rising 50-day moving average, and the bigger level of support for these guys is at about 1620. If 1620 breaks, then we're going to get defensive, because that will have meant that we probably have a lower high and then a lower low, and that could represent bigger trouble for this group. When we take a look at the intraday time frame, there aren't really as many. We've got, any trend line that really exists was probably broken here Thursday, Friday, Wednesday, Thursday, and in here we can also see that this area, where we have the 5-day moving average right now. Let's just back that up to a 30-minute time frame, and 30 minutes not giving us enough days, so let's just keep it on that. But this level here at 1680 is an important level. It was resistance a couple times, became support, and we're right up to that level as well. Ideally, if this market's gonna, if the financials are gonna recover here, what we'd like to see is a pullback maybe towards 1660, create a higher low, and then push up above 1680 and hold on, and then we'll have a new higher low that would be important. But right now, these markets, you look at where they are for Monday with them at their declining 5-day moving averages. Ideally, we'd like a pullback that then recovers. If this market is changing trend, then a pullback that doesn't recover would be the biggest fear of the bullish environment, maybe being in jeopardy. The Russell 2000 I had mentioned on Wednesday, right in here at this level, for two reasons. Because one, it was at the 50-day moving average, and secondly, it was at the 61.8% retracement of the range year to date. So just taking the low for the year, and that's a volume weighted average price, taking the Fibonacci of the low for the year up to the low for the high for the year, we came in and tested that 61.8% retracement level. That's also where the 50-day moving average was found as well. It didn't make a good buy necessarily, but it was actually the lows right in there, and I'd mention it right at about this point here as it was coming up off that low. So that was about as close to the low as you were going to be able to buy. It doesn't mean there wasn't some stress that went along with it the next day. The next 24 hours were pretty stressful as it went up and down, but this market really impressive the way the Russell has exceeded 61.8% of the sell-off that from this past week, from a week ago Friday's highs to the highs lows this week, and we still have a declining 5-day moving average in there. But what would be kind of an interesting scenario is maybe this market pulls back down and finds support along that 55-day moving average, and the 5-day moving average flattens out, and perhaps the Russell 2000 can continue to lead this market. It is close to all-time highs, as we know, and maybe this market is just sucking in another group of short sellers to be the victims that lead this to all-time highs. So it's still in a primary uptrend. When you look at the daily and the weekly time frames, we're in uptrends. So to me, I guess that a reversal versus new highs, I would say new highs are more likely, but we have to be prepared for anything. Obviously, the semiconductors recovered nicely. They were up 60 or 76 cents. The bigger uptrend here on the daily time frame was broken this week. This could be another case where maybe they just need to turn sideways. If we take a look at what they've retraced from the sell-off, we can see that they've retraced more than 61.8% as well. So the semiconductors and the Russell 2000 once again are emerging as the leaders, while the financials still lag. A pullback down towards 35.50 would be a healthy thing for these semiconductors on Monday, and let's just give it a little bit of time here, but the market is still healthy. New stocks, official ideas for Monday would include Coeur d'Alene Mines, CDE. You can see that the stock broke to a new high this week, and that high has not been seen in several years. Looking at it, let's draw that line straight. And getting up through here, I think this stock could you can make a case it could be heading for 33, 34 bucks a share if you're an investor. So if you're an investor, you have to think about how you want to trade it. But we saw a breakout to new highs early in the week. That is on Tuesday. The market came back in, and then we had seen some resistance develop right here at $27.69 was the highs here of these last 3 days. So I don't think we've seen the new high made. It's taken a couple days to recover with a rising 5-day moving average. So I don't think we need to wait for the new high to buy. I think there'll be buyers there. But if we can buy this stock on Monday above $27.69, then we can set our stop pretty tight too. Because look at the nice tight consolidation that this stock had on Friday. If you want to really be aggressive down here near 27.35, officially we're going to say below the mid-morning lows here of $27.15. So a risk of approximately, what would that be, 55 cents in a $27 stock. Again, if you wanted to keep your stop tighter, perhaps up in here, but we want to buy it above these highs of the last 3 days. There will probably be more buyers up there above 28.38, the all-time highs, and hey, maybe you sell a little bit to those buyers. I don't know. But CDE is an official idea for Monday. GSIC, we had spoken about this one as a potential short sale candidate. And what we were talking about in here was the volume weighted average price since the event. And since the event, let me just go over to here. This was the event, and the stock was holding up above it. Well, look what happens in this line draws dynamically. Right there on, I don't see the date, but when that volume weighted average price since this sell-off began was broken, and we had a little bit of support there as well, that's when this thing really unleashed to the downside, and there was a real nice sell-off to participate in. So it was below that little support level as well. And had you been involved, you could have had your stop right up in here. Anyways, let's not talk about what could have been trades. Instead, we'll take a look at the next potential trade setting up. We still want to look at the volume weighted average price since the event. And the event is, in my mind, 4 days ago. So if we take a look at the volume weighted average price from 4 days, we see that we're below that. Well, the real selling might have even been 3 days ago. So if we take a look at the volume weighted average price since the last 3 days, you see the stock's trying to find some support in here. So what I think we want to do is we want to wait to sell this stock short below $20.45. If it gets below there, then I think these buyers are going to be trapped, and the stock will likely continue to move lower. We'd set our stop up at about $20.95, so we'd be risking 50 cents in this stock. And if you wanted to keep your stop tighter, by all means, maybe $20.80. Make that part of the trade up to you. But the daily and weekly chart suggests that this thing is in big trouble, and perhaps there's a couple points of downside in it. So officially, we want to sell it short below 20.45 with a stop at 20.95. Last official idea will be Dell to the long side. Dell has been a nothing stock forever. I can't say forever, but for the last decade or so. It's every one of these rallies doesn't do anything, and this one probably won't amount to much either. But it looks good for a swing trade. You can see it was up on big volume. I believe it was earnings. It's consolidated nicely on diminished volume. We've got a rising 10-day moving average above the 10, above the 20-day moving average. When we drill down to the 10-minute time frame, we can see it kind of battled that 5-day moving average on Friday and created what looks like a higher low. So if we can get above this high right here from Friday at $15.28, then we want to be a buyer of the stock, and we'll put our stop close by, just under what we hope is going to be the higher low here at 15.05. So to trade Dell with a 23-cent stop to me makes sense. I think you can see it up 16 plus, maybe even higher. You look at that weekly chart again. These rallies do turn into something in Dell at certain times. People still associate it with a growth stock for some reason. But anyways, those are our 3 official ideas for Monday. Watch list ideas. Aruba Networks has been real strong. It's up at I think they are all-time highs. Nice, it gapped up. It's holding out of the gains nicely and has shown some tight consolidation. So perhaps above these highs, 30-40-ish. I wouldn't give it much room beyond maybe 29.90 if you were going to get involved on the long side there. BIIB, it's kind of neutral looking, but starting to turn. We've got that 10 back up through the 50, the 20's coming up, and just something, a bigger name to keep an eye on. Maybe above 68, it could get going, at least for a swing trade. The stock can get going nicely sometimes. CXW looks like it's breaking down. This is the bigger level it really needs to break, obviously, at about 24 bucks a share. If we look at that weekly chart, that becomes clearer that 24 bucks a share is a bigger level. And breaking 24, is it going to cave in? I don't know, but maybe a buck, a test down towards that 200-day moving average would look reasonable. And maybe it's going to need another day to recover, but it's right at the declining 5-day moving average. So it's kind of in that do or die point. If it doesn't do it Monday, then it's probably going to need a couple more days to set up. The solar stocks, as we know, I'd suggested avoiding overnights in them because of for solar. That turned out to be the right case. These guys were down on the earnings. I don't think it's going to destroy the stock, but it's going to need more time to heal. Solar that still looks decent, holding up nicely. These guys reported earnings, as we know, right back here, and that has been the catalyst for a great move. EMKR still has room to run on that weekly chart, so don't take your eyes off it. Nice tight consolidation that it had here Friday as well. So EMKR is a solar I would watch. JKS is a solar I would watch. It's not quite ready yet in here. I think maybe just maybe another run up towards the top end of that range, and then another little pullback, and then you break out past this 31 and a half level, 31.30, that JKS could be something that turns into a bigger mover here. So it's not quite ready yet, but just keep that one on your watch list. LDK, as you know, is one that I like a lot. It's got a nice looking weekly chart. The daily time frame, it got messed up by it gapped up actually, which was surprising, but the pressure in the sellers, came to this one, and this one will need a couple days to set up, but this will be nice to see. Maybe we could see a little cup and handle develop in here. So keep a close eye on LDK this week. It's at a bigger level of potential breakout where it looks like it could maybe run up, towards at least 16 bucks a share initially, and then there doesn't look like a whole bunch of price memory up in that 1920 level either. So good one to keep an eye on. I'm sorry, SOL holding that 20-day moving average as well, and still set up nicely on the weekly chart. The 10-minute time frame, not quite ready. We got a declining 5-day moving average. Maybe by about Tuesday or Wednesday, this will be okay to look at. JASO, I saw people talking about this one. The 5-day moving average is simply too steep right here, right now. It's broken a little bit. I wouldn't be watching that one closely. Yingli is another one that's okay, another solar that is. Not quite ready still. Give these things a couple days. Other watch list ideas for Monday, though, would be Lazy Boy, LZB. You can see that the buyers got up off the couch for this one on a couple weeks ago, and nice lighter volume pullback, holding right along that 10-day moving average. If you're going to be one of those people who buys early, you could make a case that you could buy it above 1030, but with that declining 5-day moving average, I'm not sure I would. If I did, I would take a very small position and worst case stop down below 985. But again, with a declining 5-day moving average, I'm hoping this will take another 2 to 3 days to settle in here. But sometimes these things, they'll push up through that 5-day moving average and just continue to run. So this doesn't mean don't buy it, but it means if you do buy it, buy less shares because of the declining 5-day moving average. I mentioned JRCC on Friday. It's not a normal type of trade, but I do like the way it's not going down and holding right at that 20-day moving average. If we can get up through that 2185, 22 area, then perhaps James River Coal could get moving, but it rallied and pulled back. It looks like a choppy stock, but I wanted to follow up on it because I think if it gets above that 2185, then there could be maybe even a quick buck in this stock. NSIT, we've been watching this one consolidate as well. The weekly chart looks decent in here. We've got this prior level of resistance. And looking at the 30-minute time frame, well, let's look at the 10-minute time frame. We're doing battle with that 5-day moving average. It's holding on to its gains. It might need to clear this bigger level to really get going, but NSIT, I'd be interested. I should have checked to see what that gap was a couple weeks ago, but obviously people are excited about something for this stock, and it's got a decent chart to support it as well. PLT, this is Plantronics. They're looking pretty vulnerable here, and maybe again here, these stocks, where do they have the room to go? I think probably only down to about the 200-day moving average at 33 bucks. But on Plantronics, maybe if it breaks below this little 1335 area, that it could be a continued decline. If we take a look at that volume weighted average price since the event. So it's right here in this area. So I would think maybe below 1335, Plantronics could be a decent short. Risk about 20 cents, and maybe you get lucky and it drops down towards that 200-day moving average at 33 bucks a share. Three more stocks. RES, I mentioned this one Friday or Thursday rather, saying that if we could get above 1850, that maybe this one could go. It got above it quickly, broke a little bit below that level. It was worst case you would have been down a dime, but finished nicely, and it's got a good looking daily chart here. Now we've got that 10 and 20 up through the 50. I think this one is a good one to keep an eye on if you're in it. Worst case stop probably at this point break even. Vantage Drilling, one of these days this thing will go. I think it's, we traded that big volume over here, and it's done what, if you recall, on that day I was saying I hoped it would do, which was maybe run up a little bit further and then pull back on lighter volume. The volume has been incredibly light here the last few days. If we take a look at since the event, the volume weighted average price since that movement higher, about 210, and I think 210 would be probably a good level that the buyers will take control of this. As I said, I bought a little bit of this thing. I wanted to hold on to it. It's it's drilling, it's oil, all those stocks have been pretty strong, and the weekly chart just looks so great if this thing could get going above that 226 level, that maybe you come in one day and it gaps higher and you don't feel like chasing. It's nice to have a little bit already, but if back below a $1.98, I'm gonna just kick this thing to the curb and be done with it. But worth keeping an eye on this week. Last one is another energy name, and this is XTXI, Crosstex Energy. If you look at this weekly chart, looking like it's getting some traction here underneath this resistance from the last year or so. That resistance was prior support, and moving up through here, buyers get excited. It could go nicely. So the daily time frame, we had this excited run. We had a pullback and consolidation in here near that 10-day moving average. I'm sorry, the 10-day moving average here on the daily chart. And when we look at it, and we had this resistance hold as support at that 10-day moving average after a low volume pullback. The 10-minute time frame, we had these lower highs and lower lows turn into Friday afternoon a higher high here. So maybe a little pullback, and then this one gets going. It's a pullback from this 960 level where it looks like it's seeing some resistance would be just perfect. Pull back a little bit and get it up through 960. I think I'd really like to buy XTXI.